Many investors wonder if farmland investing should be part of their portfolio. Like other alternative investments, such as crypto assets, art, precious metals, viaticals, reinsurance, commodities, peer to peer loans, oil, gas, venture capital, farmland is completely optional to a successful portfolio. However, some investors have decided to add farmland to their portfolio, and their arguments can be fairly convincing. Generally speaking, farmland has high returns. The returns are similar to stocks and real estate and significantly higher than bonds, CDs, gold, and other low returning asset classes. Farmland also has had negative correlation with stocks and bonds over the last 3 decades. It has moderate correlation with private real estate, with a correlation of about 0.45. That's still pretty good, considering the correlation between U.S. and international stocks can be as high as 0.8 or even 0.9, and the correlation between stocks and publicly traded REITs is typically something like 0.5. Until recently, it has not been easy to get liquidity, minimal hassle, diversification, and low fees with this asset class. It's easier now than it has ever been, but it still isn't like buying a total stock market index fund. It's understandable to worry that as it becomes easier to invest, returns will fall and correlation will rise. So, how can you invest in farmland? Well, you have a few options. The first is direct investment. You just go out and buy a farm. Another way you can do it is through a farmland syndication. And there's a few new companies and platforms that do this. They basically put up a syndicated farm, maybe 99 investors invest in it. And, so each is putting in $5 or $10 or $20,000. And as the farm makes money, you get paid out as it is sold in 5 or 10 years for more than it was bought for. You get to share in the profits with the other investors. The last way is to simply use publicly traded stocks. There's plenty of publicly traded stocks that are involved in farmland, and you can buy those either individually or, probably better idea, via an ETF that trades in farmland owning stocks. There are also private funds out there that take care of this for you and don't require you to invest in the public markets, where you can be subject to the volatility that occurs when an asset class is traded every second of every business day. Investing in farmland is reasonable for a small percentage of your portfolio, but you don't have to add it to your portfolio to be successful.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.